Hello traders, Cory Mitchell here, and this is your swing trading stock market outlook for the week of April 14th. Just a note, yes, trading courses are on sale through the end of April. You can use Easter 2025 on TradeThatSwing.com to access swing trading courses, day trading courses on stocks and Forex. There's also a longer term investing in ETFs ebook. Okay, let's get to the market outlook for this week. Very interesting out there. Each week I go through the same process, just helping me decide how I want to be trading, if I want to be trading at all. And there are some watch lists here you can check out. As we'll discuss, stock market conditions are still poor, in my opinion. Golds and gold stocks return to their uptrending ways. Bitcoin hasn't turned bullish yet, not interested there. We'll be focusing on the stocks, what would need to happen to potentially turn the corner here. We'll also look at a couple longer term statistics and how the market indices are doing. Let's check that out. So downtrend at the moment. We had this huge upside day a couple days ago, and can make it look like maybe we've turned a corner, but overall we're still in the downtrend. So we could potentially, if we had a couple strong days, like these are monster days, so if we had a couple of those to the upside, all of a sudden you're making higher swing highs. The NYSE has quite a ways to go because it had such a sharp drop. The S&P is quite a ways to go. The NASDAQ too as well. So yeah, just a long way to go. There was also, we've discussed in recent weeks, these boxes. Like this was an old range that it was in, and it's like eventually we could form a bottom down here and start pushing up, but we do eventually need to move back up into this box and eventually break out of it. So that could take some momentum to do, and that sometimes takes time to build, but I don't know. I don't really worry about that stuff too much. It's more just, are we going to see some higher swing highs and higher swing lows? That's what uptrending is. Once we start seeing that, I'm much more in favor of taking long positions, but we don't have that quite yet. Bitcoin, so this is a weekly chart. I left the weekly chart on the Canadian index too. It's basically showing what these other ones are. Big drop out of that range, downtrending behavior. The Bitcoin, so we had this range up here. We've dropped. We're moving in this range down here. Basically what I would want to see before I really get interested. Well, there's a couple ways to look at this. We are at a typical kind of pullback amount for a bull market. So now that we've kind of ranged here, it might not be a bad opportunity to pick some up here with, a stop loss not too far below. But what I would really want to see, so this, if I took it, it would kind of be a probative position. What I really want to see is for it to move up out of this box. So start kind of pushing back up into this old box, hold above this old box, and then start moving up. Then you kind of start to see rounded bottom type pattern. Price had tried to go lower here, couldn't gain much traction, starts moving up. Then this little area starts acting like support, and we can build the momentum to the upside. So that would be the real kind of bullish turn. But taking some positions right now based on these kind of drops, like this one was about 22%. This one was 33%. This one was about 23%, if I recall. And those are kind of that 25 to 30% is, well, 20 to 30% is a very common pullback in an overall bull market. So we're still well within that kind of ballpark for this. So it's, if we kind of make that assumption that this is going to continue in the uptrending direction, you can make that assessment for yourself. We are still in the uptrend at the moment. Then this is we've basically hit the typical amount of a pullback. So maybe there's some potential there, but I really like if this would build to the upside, because I don't really need to be the first one into a move per se if I'm looking at it from a longer term perspective. And I would be looking at this from a longer, not super long, but to catch potentially the next up wave, which in Bitcoin can be fairly substantial. So yeah, I don't mind waiting a little bit. The gold miners ETF, yeah, this big drop definitely scared me. We were still in the uptrend. We had mentioned that, but I said I wanted to step aside, give it a couple days. Huge run. We did have, this is basically, if you've taken my day trading courses, this is a TC pattern, extremely clean pullback and takes out candle highs. And so we wouldn't have had a trigger there because this one didn't get above it. But once we moved above that candle there, stop loss could have gone below. So this is an ETF. I don't typically trade the ETFs, would be looking for more stocks. But since this is the ETF, which represents lots of stocks, may have had that same type of pattern in the individual stocks. I want to talk briefly about, I had talked about kind of normal percentage declines in Bitcoin. I have an article on that. If you go to investing, how Bitcoin moves, I have every single bull market with all the pullbacks, all the statistics of how much they typically pull back, how much they typically rally after. Yeah, very interesting article. But this is similar in terms of what the stock market typically does. So what I did was I put every 15% decline on the chart, and you can see extremely messy, right? Like this is 15% or greater, any decline of 15% or greater, which had at least a rally in between of 15%. And, just almost innumerable amounts of them. We got to recently about 22% drop on the S&P. So if we go to 20% drops, they're still pretty common, but the chart's not quite as messy. Way back here in the 1930s it was, but after the 1950s, like a 20% pullback's typically a pretty good buying opportunity. And we can see this by continuing to look at, well, how common is a 25% decline? And they start to drop off considerably. This is a much cleaner looking chart. You have these kind of like decade-long runs with typically only maybe 1 to 2 25% pullbacks. And then we tend to get the bigger drop. So the 60s, 70s had this 37 followed by a 49%. And then we had a 28% and a 35 in this 80 to 2000 run. So 20 years with basically 25% pullbacks. Then we had the 2000 crash followed by the 2008 crash. So similar here to here and even kind of here. And then we go on this 2009, we're like basically 15 years into this thing, into this bull market. And we've had two, a 35%, a 27%. We're at 21. That was the max right now. And this doesn't include dividends, so it would have been a tiny bit different with dividends because we're just looking at the index, not an ETF, which would include the dividends. So, another 25% decline, it's not out of the question by any means. But if we're considering this big uptrend still going on, then that would be quite a few big declines in a short historical time span. The other option is, maybe we are heading into another period like this. I don't know, but if we look at the data, it's just the 25% declines start getting quite rare. Once we get to 30%. There's very few. We've had one in this bull rally. We had one in the last bull rally. Really none in this whole 1940 to 1969. Very rare. And then as we continue going through it, 40% rallies, 50% declines. Very, very rare. Yet you see all the pictures out there comparing the current decline to crazy declines like 1929 to 2000 to 2007, 2008. And while it is possible that that could develop, it is a statistically much more likely that we are in a 20% to possibly 25% decline than a 50% decline, which, as you can see, after 1940, there have been 2. Out of all the drops which we saw, which started with people saying this is the end of the world, only 2 of them ended up actually being 50% declines. So just a little history lesson there. You can check out that article, A History of Stock Market Percentage Declines. I'll throw it in the links below this video. So a little bit of perspective on this as well. So while I'm waiting for the uptrend to give me a little bit more confirmation, for my investment portfolio, I'm really starting to eyeball like which companies do I really like, which stocks do I want to buy, because there is that potential that we are close to a bottom or we're near a bottom. And from a long-term perspective, maybe we do drop to a 30% decline. That's another 10% downside. Yeah, it kind of stings a little bit if I was to, buy now and then it dropped another 10%, but and I'm not buying yet. I like to wait till my market health indicators, which this video is about, turn positive, and then I'll typically start picking up the investments as well. But yeah, not a bad time. Or times like this when markets drop 20, 25%, I'm usually contributing to my passive investing portfolio, which is just market index ETFs. I am very happy to put in money on 20 and 25% declines, simply because they generally tend to not turn into 30, 40, 50% declines. So some perspective there. Not useful for day trading, because with day trading our stop losses are tight. We want to wait for the good conditions, but we do have that option with longer term investing to really start eyeballing some positions when markets have fallen. So we'll get rid of this thing because it's flashing around. But if you want Easter 2025, that's your discount code for 20% off courses. Let's look at the market health indicators. Let me just move me a little bit here. So yeah, S&P 500 chart, big drop out of this range we had been in. Volume not important right now. We could potentially need it in a few days this week for a follow-through day. So our first day of a higher low was here. Day 1, day 2, day 3, day 4. So we're 4 days into it. Between day 4 and about day 7, ideally, is when you want to see another strong move to the upside. Higher volume than the prior day, and I would want to see at least a 1.5% increase on the S&P, which is basically nothing based on the volatility we've seen recently. So that's when volume would come in. Up to about 10 days after is okay, but kind of the longer it waits, the weaker the signal. This is rate of change, simply how much the S&P is moving per day. Uptrends are characterized by lower volatility. Downtrends, turning points, characterized by higher volatility. We're seeing some pretty crazy volatility right now. We had a big greater than 2% drop, so that is still high volatility just a couple days ago. So this is still a unhappy face. But sometimes this high volatility does occur at turning points as well. So it could be just a continuation of the downtrend. It could be a turning point. We don't know. That's why we need the other health indicators. The potential follow-through day to the upside would be a good sign. If we keep going higher and then volatility contracts, that would be a really good sign. advanced decline line. This is advancing stocks minus declining stocks is a cumulative number. You can see this was the low of the S&P here, plunged way below it. This was the low of the advanced decline line, and we are just getting back to it now. So it's actually overall holding up pretty well. And we're just starting to turn a corner. We have a little bit of a higher swing low there. I would like to see, this move up above this little swing high here to start a little bit of an uptrend. That would at least turn it to neutral and potentially a smiley face. This is up volume divided by total volume. I don't think I have ever seen a so lopsided upside day as this. This indicator on here, which I created, I don't know where TradingView pulls its data from. It is usually a couple percent off compared to if you pull the actual data from like the Wall Street Journal or something of total volume for NYSE. So it's usually within a couple percent, and this is, I still find the indicator useful because if it's up near 90, I can manually calculate it, and if it's down near 10, I can manually calculate it just to make sure it's either above 90 or above, or 10 or below. So this was like almost 100. Like it was up there in the like 98, 99% of volume that occurred that day occurred in stocks that moved to the upside. So pretty huge momentum swing there, at least for the day. And so that's bullish, right? These tend to occur near bottoms, but we did have two 80% plus, which count as a 90%. Those ones didn't go, right? So we got that signal and price collapsed. We get a signal again. Maybe this one is a winner. They are generally pretty good as a timing indicator. This did not hit 10%. This was 14%. So not a reversal of the bullish signal, because if we were to get a 10% downside day, 10% upside, meaning a 90% downside volume day, meaning this indicator is way down here, that would basically reverse this signal, because we're getting a super bearish flood coming back into the market. Percentage of stocks above their 50-day moving average, just under 20% of S&P 500 stocks are above their 50-day moving average. 14% of all U.S. stocks are above their 50-day moving average. So most stocks are below their 50-day moving average, which makes sense. They are in short-term downtrends. I find it much easier to make money when this is above 50. When most stocks are moving up, it's going to generally be easier to make money by buying stocks. And when it's, really flatlining or below, not so good. Sectors on the move. Materials and industrials really helped out by gold this week. Materials, gold part industry within materials. So that is what has been good. Nothing really great in terms of sectors overall, but gold industry, you can have specific industries. So even though the sectors may all look good, you could have a specific industry that's performing well. Gold has been that recently, even though the materials sector as a whole hasn't been, super great. What I'm doing right now, just enjoying the volatility by day trading. No longs in stocks outside of gold stocks if I wanted to get involved. Bitcoin still dead to me. I did put one note in here, which I think is worth. So market health indicators are poor. Shorts are an option, but I find it just as scary in the current environment. With this, crazy volatility. I've just decided to pretty much back off and wait till things settle, because for this reason. It's not just about price, where price may go. It's about how easy it is to make or lose money. I want to trade in times where I feel it's very easy to make money, where prices are moving nicely. You have nice trends. You have strong upside momentum or downside momentum if you're going short. When you have these like almost like news-driven events where you could be, riding a beautiful short and then the price spikes, like the S&P spiked almost 10%. That's in a day. Like, to me, that's not a environment that I want to be swing trading in. That's fine for day trading, but and that's why I like day trading as well. Something you can do every day. Whereas swing trading, there are these lulls where there's no trading, and this is one of those times. It's like I'll just wait. I'll wait for opportunities that I like, because I just feel it's too kind of news driven, and it just doesn't fit my style. So I'll just hang out, day trade, wait for something that I like. So that's your weekly outlook for the week of April 14th. Remember, if you are interested in any of the trading courses, stock swing trading, forex day trading, you can see them all here. They are 20% off till the end of April. Use code Easter 2025. Have a great trading week out there.